Good morning, good morning. Hey, Rasto, I am listening. How are you, my friend? Good to see everyone. Welcome to the tradingsyndicate.org. I'm JJ, vwaptrader1 on X. Thank you for being with us. And welcome to Tuesday, the 29th. And this is the day before month end. Hey, Troy, how you doing? Hey, Colin, how you doing, Colin, Viper, Lear. What's up, Travis? Ronan? Hey, Hank. Hey, Gustav. How are you? What's up, Punta? Hey, nice work, Colin. Nice work. Well done. You're already up 20 points today. Just sit back and relax. Hey, Dan. How you doing? Welcome, everyone. What's up, Raj? Supra. What's going on, Supra? So today is the day that you wire money out of your trading account into your bank account and take tomorrow off. Right? That's what smart money does. Right? Today's the day you request wires. Right? So you don't blow all your money trying to trade month end. Hank, that's good to hear. What's up, Jam? Hey, whatever, man. How are you? Good morning. Good morning, good afternoon, good evening, wherever we find you, whatever part of the world you're in. That's the cool thing about social media age. You get to talk to people all over the world. S-Pill, what's up? Okay, so we keep sort of creeping higher, eh? Going into this month end, it's a slow and steady creep. Sorry, I've got the that freakish Sunday night profile there. Let me go get rid of that. I'll make the chart a little cleaner here. Okay. So folks, we could see that every time this market sort of breaks trend, it's a buying opportunity. Now, for those gun to the head shorts, there's some levels that you're going to have to be aware of, right? We don't have a poor low tonight. No, we don't, do we? Okay, good. So, real quick, the low from Friday and the low from Thursday, those two poor lows have to be taken out to get any kind of downside action. if we were to take out this low, say, I think it's at 96 or something like that, then a good amount of that inventory would come falling out, right? Now, unfortunately, in this market, in this uptrend, we've had the liquidations have only really lasted for a day. You know, we had a balance here, and then we had a liquidation, and then straight back up, another liquidation, and then straight back up. So every time this kooky thing liquidates, it brings in buying. So that's something to be aware of for our larger traders who are trying to understand what the hell's going on, right? You know, the truth of the matter is, and it's not a tinfoil hat thing, this market is not built for liquidation. Because it's built for large position investors to buy and hold. They want you to buy and hold, right? Like, come on. You know they don't want us trading, right? They'll take our money, right? Right? This is like Seinfeld, Lear. This is like a phoenix rising from Arizona, right? The establishment, they don't want us day trading. They want us just to come every month, give give them our money and then go away, right? Like Russell Peters says, take it and go, right? Just buy some stock, come back next month and don't make any noise. Don't bother us. We're too busy on our yachts, right? They'll take our money if we're trading. Hey, Matt, how you doing? Right? They'll take our money. They'll happily take our money. So we have to be a little bit cautious when it comes like tomorrow, right? Tomorrow is butt dead. So tomorrow is when they all sit there like Scrooge McDuck and they count all the money they made that month, right? That's what tomorrow is, right? If you can imagine a room full of like 300 Scrooge McDucks rolling around in their gold coins. That's what month end is, okay? And the ducks that owe money have to like, give coins, but most of the ducks are taking coins. So for us, that means we have to be a little bit cautious on the way we trade, okay? Right? We want to tiptoe around this market, right? We are scavengers, right? That's why I like day trading because we don't have to really commit a huge amount of capital and we don't have to really commit a lot of time. We can get in and out, steal a few oranges, grab a pineapple or two and get the hell out of Dodge. So how do we look at this? Well, overnight inventory is about, 98% long? Right? Exactly, Mike. Overnight inventory is about 98% long. If we do open on a gap, I'd say we'd fill it because we've been filling them recently, right? But, of course, what I'm saying is not written in stone, right? So when I do these things, the first part of the morning for people who are joining us is I'm kind of showing you where the landmines are buried as we go walking into the field, okay? So that is one area of where I'll let the large traders figure out whether we open on a gap or not, inside or outside yesterday's range. Hopefully, we open inside yesterday's range and we get a little bit of liquidation down so we can see price is right there at yesterday's high, So there are trap shorts here because when the market liquidated down, every time it liquidated to a higher point. So right now the short position's under 64.32. So if we break 32, It'll be nice if we get some of this inventory coming out. It'd be nice to get a liquidation the day before month end, right? Sometimes, and I don't know, does anybody run stats? Like on the day before month end, what is the percentage of days the day right before month end do we liquidate? Do we have like a down day or at least a good liquidation? That would be interesting to check because it would let some of these people who are trapped off the hook, you know? In either case, if we get liquidation down to the close or to the overnight low, that would be handy, right? And if we break the overnight low and if we break 64.19, we'd be looking for yesterday's low, which is around 64.08. Right? Now, none of that's guaranteed. If overnight, here's a scenario which has kind of been happening. You get a liquidation, the market finds the bid, it goes sideways for a while, and then you get that move back up. And that's exactly what happened yesterday. Now, yesterday it happened at the end of the day, the market liquidated, right? There's our J period liquidation, there's the J low. And then KLM. M opens, comes down, can't take out the low of K, can't take out the L low, and then straight up. Now, people call this a price spike. It's not a price spike because it's inside range. So this is actually not a price spike. A spike is up here or down here, right? But if it's inside the range, it's not a spike. What happened was you had a liquidation into accumulation. The selling ran out, and they ran this price up at the end of the day and marked it up. Right? So that's why the overnight low is just a few ticks underneath yesterday's close because everybody's short underneath 64.22 from these are what we call our late afternoon shorts, right? Yeah, exactly, Mike. How would I define any kind of liquidation in this market, Mr. M? Maybe just even a negative day. I'm not looking for much. I'm just looking to see if we can get well, any kind of liquidation before the end of the month to let those poor trapped shorts off the hook. Right? You can tell when a market has a lot of trapped shorts in it. How do you do that? Well, any sort of liquidation is bought up really quickly. Right? Like Mike just said, price goes down a bunch of times in a row really fast, but man, it pops right back up. You know, usually it liquidates, like yesterday, for example. If it was more of a normal market, the market would have liquidated an M, Globex would have gone sideways and then up. But the fact that M period did not liquidate at all, other than maybe 6 ticks from the open of M period, right? Hey, there you are, Kunj. Why are shorts holding? Why haven't they covered by now? You're going to have to ask them, my friend, because they have analysts that tell them to do this, do that. Some of them are hedging, some of them, all different reasons, right? You know, these folks have all sorts of strategies, but I can tell where they're short. Why they're short, I don't know. Where they're short, that's more important, right? That's a good question you're asking. Why are the shorts still holding? All sorts of reasons. Do we care? Not really. But what's important? Not why they're short, where they're short, right? That's important because where the shorts are trapped, that is what retail folks call support. Super, that's hilarious. Did you just make that like in 2 seconds? Right? That's hilarious. Right? They have all sorts of reasons. right? Like we know people that, well, they're not active in our room, but they're friends of our room, and they're big traders. They'll trade like thousands of E-mini contracts, and they'll hold them. They'll build a short position, and they'll trade around it in other accounts long. They have prime brokerage accounts, so they trade at institutional levels with institutional credit, execution, all that sort of thing, and it's a different business. We are in a trade. As soon as the business reason for our trade disappears, so do we, right? Does that make sense? So currently, let's see. We have the overnight POX up here at 38 and a quarter. I'll go and mark the stops. There's that. The M low, I think, would be a big stop if we took that out. If we open underneath the previous day high, we will not have a gap, which would be nice to not have a gap. Trades off the open. If I'm shorting and we're underneath, if you see liquidation and you're shorting, and we stay underneath yesterday's high, then the stop at that W high, low, and the M low, those would be your first targets to take out. If we take those out, we'll look for 29, which is right here on the old candle wax. Yesterday's point of control is down here, which means, see, the cost basis of yesterday is right here. See this? That's why we went sideways here last night, and then up into distribution. So if we really put it on sale, we'll come back to this area from 27 to 29. Okay? Any serious liquidation will take us underneath the overnight low at 23. Now, what if this whole thing goes upside down? Right? What if we don't get any liquidation? Well, your upper stops are 36, 37 and 3/4, 40 half, and then of course the overnight high at 42 half. Right. Remember, if we take out that overnight high, be careful on the short side because there's no inventory up there. Right? There's not much inventory at all. Oh, hang on. Let me just answer a message here. So really, the first order of business, right? If this was, one of those business meetings where we bang the gavel, the first order of business, ladies and gentlemen, is do we open on a gap or not? And if we open on a gap, do we fill the gap? So those are the first two things to look at, right? And then after that, it's just determining direction. Oh yeah, the NQ's kind of gone a little cuckoo, hasn't it? I gotta set my times on my NQTPO are not right. Hang on. Yeah, there it is on the weekly. Check that out. Huh. Amazing. This leather jacket guy, he's doing well? Let's see. Go take a look at it. When do they have earnings? Or are they all announced? Wow, look at that. 178. Jeez. And they filled the gap. So the stock's stronger. Nice work. Interesting stuff. Look, a bid. A bid, a bid, a bid. See, this is the problem. No, no, no. A gap doesn't need to be filled. It's healthy if it does get filled. It doesn't have to fill. There is a misconception out there that gaps need to be filled. Sometimes a gap can be in place for years before it fills. It's all dependent on the order flow or the customers that come in the market. So if a market it keeps advancing for years and years and years, and you've got a gap, it's going to take a while to get back down there and fill it. We have unfilled gaps in the ES that stretch back to COVID times. All right? So just because there is a gap doesn't mean it has to fill. When markets gap up, come back and fill them and then move higher off them, old traders like myself have this theory that the market is stronger. Because you've gone into the gap, you've tested the bids there, and you've tested the bid and the bid shows itself. The buyers show themselves. That's why we like to see a gap fill and then a market move higher off the gap fill. Right? Because it proves that the buying is not just a one-time thing. Right? So when a gap is unfilled, there's doubt as to what's down there. Right? So that's how I look at gaps. Yeah, gaps, the whole gap fill thing, it's all dependent on the order flow. Right? If you've got the order flow to fill the gap, it's going to fill. If it's not, if you don't have the sellers, here's the thing, folks. Why do people lower prices? No problem. Just think of it anytime you're kind of in a conundrum in this business. Just go to common sense. Your default should be common sense and talk it through. Don't ever be afraid to talk through the market, like what's going on. You know how people say it's random? Those people are randomly bent because they have no idea what's going on. There's nothing random in this business, right? The only thing that's random is what kind of customer flow are we going to get today? That's the only sort of unknown quantity. We know the inventory. We know what our agenda is. The unknown is who comes into the store, right? Exactly, Lear. Right? Exactly. Our main thing is to find out where the buying is. Once we understand where the bid is, it means that the sellers don't have to sell underneath that price. The only reason price goes down is because the sellers are forced to lower price to get rid of their inventory. You see? See that we made a nice little move up to 37, 37 and a half, and nobody wanted to buy it up here, right? So they had to lower price, right? They wouldn't take the 38, so now let's lower the price to 36 and let's see if we can get a nibble, right? Can we get somebody nibbling on this thing down here? And as soon as they start to nibble, what do? We play hard to get and move price higher and see if they'll chase. Now this happens all electronically now, so it's insanely efficient. So in the old days, you had traders on phones manually moving bids and asks. Here, you have guys like Mikey in our room who write code that moves the bid and ask so fast it'll make your head spin, right? The machines have taken over. The agenda is still the same, right? Algos and all of that, they just help make the market more efficient. You can do more transactions in a minute. You can deliver your product faster with less expense. And you don't have to bail algos out of jail or put them into rehab like market makers. So they're an economical choice. They're efficient. They don't require lawyers. And they don't get into bar fights. So if we opened right now, we'd open on a little gap. And as someone who's babysat drunk market makers, it's not really that fun. Algos are not cool, but but you get a good night's sleep. Right? Algos don't call you at 3 in the morning and go, JJ, I'm in jail. Can you come bail me out? Right? Yeah. Exactly, I am listening. Right? They know when to stop selling. All right. God, if I had a nickel for every time that happened. Did I ever tell you about the market maker wedding where two market makers got married and they ended up getting arrested and spent their wedding night in jail? That's a good story. Look at this. Who's coming in? Someone's got an appetite at 35, 36. Hello. Now can we take out that 37 and a half, 37 and 3/4 stop? We got a little bit of mystery here. Right? As soon as we come into that VWAP, they bid, boom, back up. Now we know we have sellers up here at 40 and change. I'm trying to find the next level where we'd find a resistance, as the French would say. Where am I looking? Oh, those three right there. Let's see. Yep, exactly, Mike. Okay, there's a seller here too. See that? You see that seller before the open? There, they're right there at 37/4. Oh, they lifted. All right. Let the market open. Let the billionaires punch each other in the face. Then you take your trade when your setup's there, okay? You don't have to trade the first couple of minutes of the open if you're not comfortable with it. Remember, you have a 23-hour trading day. Just take it easy, nice and slow. All right, so we got some bids coming in off the open. Pretty much. Oh, hey, Leslie, thank you. See how we're slowing down right before that line? Because there have been sellers there before, my friends, right? Hey, John. So right back down, we're going to go and find the bid now, right? We've opened on a gap. As we get down to the open, you find responsive buying. Let's see if it holds. Thanks, Jeff. How you doing this morning? If you're short, understand that there will be some responsive bids down at that gap fill, okay? So you want to front run it. There, the gap is filled, okay? Now, if we get underneath the previous day high, these red lines are your targets. Pretty simple, right? There's a little bit of responsive buying off the gap fill. Now let's see if it holds or if it breaks underneath. A little responsive buying. You want a seller at 34 and a quarter, right? If you lose your 34 and a quarter seller, it's going to rotate higher, right? If it rotates higher, your target is the open at 36 and three quarters. Damn, I missed that. That's okay. Now, let's see if we're going to come down and test 34 and three quarters again. Let's see if we can get down here. Just take your time. There's no reason to overtrade. Just take it easy. Look for the responsive buying. Right? There's sellers at 37 and a quarter. Be mindful of that. They'll come in again. There's sellers before that. It's very choppy right here, so don't feel bad if you don't get a sense of direction because there really isn't any. No, yesterday's overnight high was up there, Avalon. Yeah, you're thinking about the overnight high. Hey, Derek, how you doing? Look how small the candles are here. Right? Meaning just chill out. Let the trade come to you. You're okay in your long as we hold above VWAP. So if you're building a position, right? Say you're buying 35 and a half quarter, right? You know that there are sellers at 36 quarter, 37 quarter, right? So you know that you're probably not going to get a lot for your goods. And your out is VWAP, right? So just make sure you sell into strength, right? Long 35 half, sell 36 half, 36 and three quarters, right? And if you can't, then just hit the bid and be gone, right? don't waste a lot of money getting stopped out and trying to get larger dollar value for your trade, because you got sellers right here and they stop selling at VWAP. So you've got a very, very tight rotation. Trading tight rotations isn't really, you know, it's not really economically viable for 2 to 3 contract traders, right? Now, if you were long, right, if you built that position between 35 and 37, best get to selling. Sell into strength. Thank you, Mike, for the Wimbledon reference. Didn't take you for a tennis guy. Ugh. Exactly, right? You got to sell into strength. In a choppy market, folks, sell into strength. Don't wait for an invitation, right? Don't be influenced by other people. Take your profits, right? In the immortal words of Cat Stevens, make your paper boo-boo, right? Make your paper, right? Don't wait for an invitation to sell your goods in a choppy market, okay? Yeah, there is a thing about Wall Street guys in tennis, isn't there? Jolts at 10. Okay. Well, maybe it'll jolt some frickin' inventory loose, S-Bill. Yeah, never beat your boss at tennis. Uh, Troy, just DM me. I'll send you my charts. The overnight high, Avalon. We don't count that. We've been told not to count the overnight high. We've been told by the old guard that the high only counts if it's made in RTH because the market's open, right? The overnight high, you can push the overnight price all over the place because there's less traders and people can bully price around, right? That's why sometimes things get really out of control on the overnight and correct in the morning when the market opens. Hope that makes sense. We're slowly creeping upward, right? So when I started retail trading, like when I was making markets, nobody cared about all-time highs or overnight. We didn't care about that. We just had to move our paper, right? Yeah, the Chicago guys had that 30-second opening range thing. I don't know how to use that, right? And 30 seconds is a very, very short period of time. You got to be quick. But old floor traders were quick because there was a sense of urgency, right? Anytime you work in the business, you have a sense of urgency because you got your client breathing down your neck, right? Asking, where's my fill? Every 5 seconds, they're screaming at you, where's my fill? Right? Which means, I told you to do something. What's the result? Right? That's why, once again, algos, have taken over the business because they've increased the efficiency of the transaction process. Why is speed important? Because bids don't last long, right? If Mike gave me an order to sell 200,000 shares at $1 and somebody else snakes that buyer when the buy comes in, Mike's going to be out 200 grand and I'm going to be fired as an executing trader, right? You're only as good as your last execution. A little bit of distribution here. Right? There's no such thing as job security as an executing trader. It's eat or be eaten. You got to do whatever you can to get the price, Troy. It's either through cutting deals, intimidation, blackmail, whatever you need to do to get your client the best price. You got to do it. This is choppy. Whew. And, with tomorrow being a Fed day, I'm not really expecting much other than annoying price action. So, really, today's the day. Today's the day that you should be wiring money out of your brokerage account. Yes, Avalon. We are schooled to use RTH. Now, I don't know anyone who uses Globex for those highs and lows. I know people who keep track of them, right? O.J. Simpson, hey, how you doing? Juice, back from the grave. uh, yeah. Oh, you'll find that the older crowd always says, use the RTH high, low, close. Don't use the Globex because the market's not open. So that's their reasoning. Now, okay, can we get some liquidation here, as the King of Queens would say? Let me short one contract. Damn! I went to short 34 and a half and it ran away from me like a pretty girl at the high school dance. God damn it. Well, that was quick. You snooze, you lose. Nice work, Lear. We need some liquidation. Badly. Like farmers need rain. It's been a drought. And look at this. We came right to that W low and we stopped on a dime. And the shorts are covering. Ah, I know. Ugh. All right. A trade that I used to like, it doesn't really work so much anymore, is the market would rebound, go to VWAP, and you'd short VWAP, put your stop above it. But these days, this frickin' thing gets so short that it rips right through. Would common sense there are a lot of stops above the ETH high? Yes, O.J. Simpson. Definitely. Definitely, definitely. All right, let's try that again on the 34 half. Oh, come on. Just frickin' sell off like a normal market. There we go. Going begging for a 33-quarter bid. My stop's 35 and a quarter. Come on. Hit the bid, you miserable. Come on. Give me one more tick. Covered at 33 and a quarter. I'm not going to the Bentley dealership on that trade, that's for sure. Hey, Mike. How you doing? They short it to them, Troy. That's called shorting to retail. That is a function of a market maker. That's a great question. What does wholesale do when they run out of supply but there are still buyers? You short to the buyer. It's called shorting to retail, which is a business function of market making. Great question. There we go. Down to 32. And remember I said we'd come back down to cost basis? So I'm looking for the 29s now. I should have re-shorted the 34s. Ugh. You know, base hits are a beautiful thing, O.J. Simpson. Base hits are a beautiful thing. They add up. I know a lot of traders who've made millions of dollars just grinding away for points here and there. Over, decades, of course. It doesn't happen overnight. Covered with some dignity. Nice work, Mike. It's always nice to cover your short with some dignity. That's a rare thing these days. So yesterday's cost basis was down here, 28 and a quarter. So we're going to just kind of gently drift down to this area here. There we go. Boom, there we go, 28 and a half. What'd I tell you? Woo, look, and continuation. What a gift. Beautiful. Oh, that's lovely. Just beautiful. Ah, how nice is that? Beautiful. Gonna have a quick bounce back up. See how it's just kind of going back and forth here? Oh, this is good. This is really good. Good liquidation. Let's see if we can correct inventory all the way down to the close, which is at 24 and a half. Numbers in 10 minutes. Thank you, sir. Gonna wait for the next candle. If we hold 26, I'll go long. sell into the 28s. There we go, there we go. Right. There we go, there we go. Long 27, selling 28s. I've got 3 left, 2 left. Banging them out with both hands. Take them. Take me, you dirty, rotten scoundrel. 1 left, and I am flat. Thanks for coming out. Oh. Done. Right, so here I said if it holds 26, I'm going long. Went long 27, bought a few, pumped them out into the 28s. Right? It's not a lot, but it works. Pays the light bill. It's just repetition, Hank. We'll work on that. Now, if we accept over 29 and get past the goalie at 30 and a half, we're looking for 32. Right? We came right back into yesterday's cost basis, stopped selling. The shorts came in and covered, right? That's what's going on. The first people to cover were the shorts. Then we bought a little, right? And the wholesale's building a position, then we buy a little. Now, the people who short down here, once they realize that they're short in the wrong spot, they'll help rip it all the way back to VWAP, if enough people shorted it under 29. It's not a poor low, Hunter. You need at least 2 half-hour periods to call something a poor low. So we need another half hour. The fact that it didn't hit the close is, I think, what you're picking up on, right? That means we just ran out of supply. Why would we run out of supply? There's no need to sell it underneath 26. We're creeping up on 32. Let's see if we can get there. Oh, there's a seller at 31.5. What causes a poor low or high? Competitive buying for a poor low, competitive selling for a poor high. So a poor high and a poor low are generally places where the wholesalers are on both sides and they'll both jump in at the poor high or the poor low. And that competitive buying or selling creates the poor low. The real reason that poor lows and highs are created is because of electronic trading. Because electronic trading is so precise, and nobody's ever said this. And I'm sure this is controversial, and I'm sure the old market profile guys will hate me for saying this. But the real reason that poor lows and poor highs are created is electronic trading. Because electronic trading is insanely precise, and it is completely unemotional. Whereas a human being would let a high slip or a low slip, the machine, if it's programmed to stop selling at a certain level, it will stop. Right? If it's programmed to stop buying at a certain level, it'll stop dead. Right? Which will create a lack of excess. So we did hit 32. Yeah, no problem. I'm sure that's not a popular view, but you have to embrace the electronic age, right? It's a whole new game, baby. AI, crypto, schmipto. The 0 and 1 mafia is strong now, right? They're the Da Vinci's of the modern world. Back down to 29. I think we'll go sideways here for a bit. Got 4 minutes till the next half period. Must buy a Tesla. Well, have you been programmed? Have you been brainwashed, Mike? Must buy Tesla. I don't know. My girlfriend is into this self-driving car thing. She wants to. I don't know. That kind of stuff makes me nervous. I think I'm still old that way. Not so sure about this self-driving car. I don't know. I'm all for progress, but I don't know about the self-driving car just yet. I'll have to give that time. Old dog has to learn new tricks. Ugh. Whoa, look at that. There's your news. Hello. Little bit of running the news, was that? Hey, Ed, how are you? These folks say the computers are programmed to buy the S&P at $5.60. I have no idea what that means. How you doing? Long time no see, Ed. Hope life is well. Is treating you well. Travis, news, don't be in a trade. I don't know what it's going to do. All I know is it's going to hurt me one way or another. That's why I refuse to be in a trade when the news comes out. No thanks. Go sell your weirdness somewhere else. We're all full here. Oh, good. Good to hear. Good to hear. Good to hear you're doing well, my friend. Uh, you kind of zigged when you should have zagged there, Dan. It's okay. Don't worry about it. Here's the thing, Dan. Don't waste too much time on all that stuff. I said earlier this morning, there's a lot of stuff that's written, and say hi to the princess, Ed. This market profile stuff, you know, there's only about four things that you really need that are actually going to make you money. There's a lot of it that is just kind of verbose. And I'm saying that with the greatest amount of respect, right? It's not going to help you make any money at all. So what I focused on with market profile, because I went down the market profile rabbit hole, and I love market profile, and I'm very grateful to it. But you can waste a lot of time with market profile and not make any money. So what I concentrate on is what in market profile is going to make you money. Poor highs, poor lows, single prints, knowing where the inventory is priced. Everything else, just take it and put it on the bookshelf for summer reading. Okay? But in an actual street fight, right, you want to keep the amount of information in your head very, very thin so you can focus on execution, right? Someone was saying that I execute quickly. The reason I execute quickly is I'm only looking at one thing when I'm executing. I'm just looking at one thing, and that is this. I don't care about anything else, right? It's easy to do. There's so much information, Dan. We can spend, literally, I spent years trying to look at all the little details of market profile, and it didn't make me a dime. And none of it was repeatable, and you couldn't put it into a trade setup, right? There's a lot of theory, and it's beautiful and wonderful. And sometimes the details work, and sometimes it works to the tick. But it's not repeatable, and it didn't give me any confidence in taking the trades, and it sure as hell didn't help me with my risk, right? So I said, okay, let's take the information from market profile, apply it to candlesticks, because a 1 minute candlestick gives you an insane amount of information that is actionable. What does that mean? That means you can actually use it to make money, right? Like I know when I went long here, not here, sorry. Where did I go long? Was it here? Yeah, when I went long here at the 27s, I had my stop here and my sell order here, right? It's very simple, right? So that's all I have to concentrate on, is not screwing that little execution up. You want to have a clear head when you're executing. There's no sense having 300 things running through your head when you're trying to execute trades. All it's going to do is screw you up royally, right? That's why, when you look on X and you see people, they have like a 12-page trade plan. They have these trade plans and they're written like a doctoral thesis. It's not going to it's not going to make them any money. The four things for market profile, Troy, are poor high, poor low, single prints, and where the inventory is priced. So the stuff that I show you every morning when we start, that other chart. Yeah, and you have to be quick on the 1 minute. And at first it seems daunting, right? Like it seems very difficult. But it's just like anything else. When you ride a bicycle, at first you feel like you're going to fall over, and you're not riding it very quickly. Same with a motorcycle. You need just to put in the work. Put in the hours, and things will start slowing down. Also, if you're learning, trade Globex when it's slower, right? Thanks, Junta. I appreciate it. I just want regular people to have a chance, a fighting chance. You know? Because I see you guys just getting robbed blind out there. And I got robbed too, so, I understand what it's like. Right? I call it blue collar trading. And I noticed a couple of other people have started adapting that blue collar trading. I noticed on Twitter, I see it coming around now. I've been saying it for a year or two. It's very simple. Make your money. Show up for work every day. Some days you're not going to make any money. On the days that you don't make a lot of money, try not to lose it all. Right? So you can go and be able to do business tomorrow. And that's what we teach you at the Trading Syndicate. By the way, I'm supposed to be pumping the room. Drop by, say hi. It's $20 a month now. There's no contracts or anything. You can try it for a month. If you don't like it, you can cancel. I should have been long 30. Oh well. It's kind of slowing down again. Yeah, I'm not really ready to call a direction yet. Nasdaq's going a little lower. Good stuff, Colin. Good stuff. That's good, Dan. If you've already made money, take a coffee break. If you haven't, just chill. Don't worry, your setup will come. Market's definitely on a coffee break. The algos are on a smoke break, folks. Do not disturb. Oh, when are we buying a yacht? I don't know. I think it's best to have a friend who has a yacht. Like a generous friend who has a yacht. I always use limit orders to execute. Kunj. Yep. Good stuff, Robin. Good stuff. Way to go. Bid's at 29. Yeah. Well, you know what? If you need help with that, DM me. Market orders are not really the way to go. I'm seeing bids at 29. I'm seeing sellers at 32. Well, 31 and a quarter. All right. Okay. If you're long 29 to 30, Put them out for sale. Sell them if you got them. Good stuff. Well, I would say just based on what's going on here, right? If you're position long between 29 and 32, as soon as it breaks over 32, be on the offer. Be on the offer. And maybe if we get to VWAP and you see that reaction, right? Maybe a look above VWAP and fail, then it's a short back down. But if we establish a position here, we'll go and try and sell it above VWAP. That's the normal course of business. There's bids here, right? Remember what I said earlier this morning? Right? So if you're long 30, 31, get on the offer, right? Get paid, right? The cost basis of yesterday is here. The market was long and liquidated right to the cost basis. B period did not touch the cost basis, right? So whatever you're watching, the facts are the market liquidated down to its cost basis. Stop selling. Right. All that liquidating inventory is in wholesale hands now. Now they're going to go up and sell it up here, wherever they can get rid of it, right? What if you're long 32 and 3/4? You're a little high, Mike, but that's okay. Mikey, put some out right before 34, right? If you got like 5 or 10, see there's a seller right here. So if you put out a 33 and a 3/4 sell and it gets executed, then you know you can put your other sells up. Your target's going to be 35. You see how there's a constant seller at 33, right? There's another constant seller at 33 and 3/4. So if I was long 32, 31, I'd put a one seller order out and see if it gets taken. If it gets taken, there's more probable likelihood that we'll see higher, right? Look, see how that seller's coming in? They're right there. Look at those candles. They're all lining up. Oh, there's a print, right? So a little bit of interest. Let's see if we can we hold the bid, right? And just make sure you liquidate it into this strength. VWAP's up here. So VWAP's always the goalie on the way up, right? Where's VWAP? Oh, that's why the sellers are all congregating. Everyone's front running VWAP, right? Two-day RTH VWAP? I've never even heard of that, Dan. Right. Now, I'm not poo-pooing any indicator or anything like that. I just can't talk about it if I have no experience about it, because then I'm talking it out of the side of my mouth, right? I'm sure there's a lot of stuff out there that I haven't seen, or but if I haven't put in the work, I haven't even heard of 2-day RTH VWAP. See, I just use plain old vanilla VWAP, 23 hour, right? Whoever has the best cost basis has already won. Exactly, Mike. Markets are all about cost basis. If you've got the lowest cost basis, you're already in the money. The VWAP I'm using is anchored from last night's Globex Open, Jeff. 6 p.m. New York time. So it's session VWAP. The trading session's 23 hours, so I use 23-hour VWAP. I wasn't on the pit, I was on the desk. I started right when the trading floors were closing. So, and I was never in Chicago. I worked in Vancouver. So I ran a U.S. trading desk for a Canadian brokerage firm. Well, first I started out as a rookie and then ended up branching off and running, my clients out of that brokerage firm. We had lots of crazy people in the business. See you, Mike. Have a good one. I don't trust the B low. I don't trust it either. It's just kind of hanging there. No, I found out about this business. I always knew about it. I mean, in the 80s, I saw Trading Places and I was totally intrigued. But I did 4 years of microbiology because my parents wanted me to be a doctor. That would not have been good. Um, and I ended up working in a nightclub, so there goes that degree. And when I was working at the nightclub, all the traders from the Vancouver Stock Exchange would come in because our club was right next door to a gentleman's club. And so the traders would come in, and I got friendly with a couple of them, and one of them gave me the book Liar's Poker, and I was hooked. Once I read Liar's Poker, Michael Lewis's first book, I was like, that's for me. Yeah, there you go, Troy. Let's see if we can get past the goalie at 33 and a quarter. See, they stopped dead again at 33 and a quarter. Yeah, Liar's Poker is a great book. See, seller's still there at 33 quarter. Ugh, not going anywhere. That's brutal. They're just perched every time it comes here. Wham, wham, wham. They let it breathe for 1 second here. That's okay. You don't have to do all your trades in one day. Let's see if we can tag that 28.5 area here. Is Earl Grey tea, is that Yorkshire tea, John? Because you guys are really like, you guys are very picky about your soccer and your tea. They're very picky about their soccer and their tea. Oh, the market really went on a coffee break and just left us here. Didn't even hang out a gone fishing sign or anything. See ya, Hank. See you on Friday. Stay out of trouble. What's going on around the rest of the world here? Look at Nvidia go. How's Crabapple? I haven't looked at Crabapple in a while. Oh, it's holding 209. I'm just going to run through a couple of equities here, folks. Amazon Rainforest holding 231. There we go. Boeing, I'm scared to look at. How's that crazy circle deal? Ah, came off again, off the 259s. This is a stock I should have bought when it was down here in the 30s. And I don't even go long, but Corning, right? They make all the fiber. Look at that. Breaking out beautifully. Right. Fiber, fiber, fiber. This HIMS I don't know anything about, but people are all over it. What else is cracking out there? Microsoft, over 504 now. Can you imagine owning that at $40 a share? How's that crazy MSTR guy doing? Oh, back to 401. GameStop. Didn't somebody say it spiked up or something like that? Or did they change the symbol? No, that's the symbol. And Tesla. Oh, yeah, I'm supposed to look at Tesla for someone. Hang on. Back under 328, or it poked its head above 328 yesterday. But it's not ready yet. There's still resistance up here. That's about it, folks. Oh, yeah, PayPal back down to 71.40. Had a nice little run up over 78. Look above and fail. Here's, folks, where you can use, if you're interested, and we'll teach you this at the Trading Syndicate. This is how you can use the way we trade. This is called a look above and fail. Okay? So what happens is when the market looks above 78.58 and fails, right? You short under that level, you put your stop at that level, right? Depending on how choppy the market is, you do your stop selection, your insurance is there, and your target is the middle of the zone. The next full target is 64.22. But there's position here at 70, so it should hold in that area there, right? Oh, what was the other one? Palantir 157. That's a nice chart. Beautifully done on that stock. Oh, is that what it is, Dan? Oh, interesting. Yes, fiber optic cables. Corning, Mike. You know Corning? Glass. I should have bought Corning. Oh well, shoulda, coulda, woulda. From the chemistry lab days, right? Alrighty, folks. Well, that pretty much wraps it up for me. What I'm curious about, 64.23 and a quarter. Can we take that out? Because this is where everyone's short from last night. What's lurking down here? Right. Oh, you want to go through Tesla again? The levels? Tesla, my concern about Tesla is 328. Yeah, no problem. There's resistance above 328 in Tesla. There's trap long inventory there. That's why it keeps struggling to stay over 328. I think if we can get Tesla up over this 361 area, you see this big chunk of volume, then the position will be underneath us and we'll get up here. But of course, the old Muskosaurus has to do his thing, right? You know, once we get above 350, 360, right? See, because most of this inventory probably has been flushed out. There's probably not that many bag holders above 380 that are still in here. And if they are, the buying retention's probably a good percentage, right? This is like anyone who bought it and got stuck here, they're going to hold it for 3 decades, right? Otherwise, they'd flush it into these bids. So once we get over this 361 level in Tesla, right, they'll go and you'll get distribution up here just like you did here, right? But right now, there are constant sellers here, and we've got to clean those out. And until we do that, it's going to take some time for the stock to get higher. Well, folks, that does it for me today. Thank you for joining us at the Trading Syndicate. Please like and subscribe. We appreciate you coming out and supporting me every morning. We'll be back here at 7:30 in the morning UK time, 2:30 in the morning New York time. And once again, very appreciative. Thank you very much. Come give us a shout in the room, and if you have any issues or if you need help, I'm vwaptrader1 on X. Thanks very much, folks. Have a wonderful day. Be safe out there, okay? Don't let the sharks get you. Bye for now.